Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is September the 17th. Today we're going to get into the biofuel market a little bit and talk about its effect on soybean oil today, as well as canola and other oil seeds. We're going to talk about Statistics Canada a little bit, and we're going to talk about the interest rate changes on both the Canadian side and the US side. So let's get into it. All right, here's what happened in markets today. We saw canola take a dip. $12.70 down at 628.10. Minneapolis wheat was down 2.5 cents at 576. Kansas wheat was down 7.25 today at 522. Chicago wheat down 5.75 today at 533.5. Soybeans took a 6 cent break at 10.49 1/4. Corn was down 2 3/4 today at 428 3/4. Soybean oil was down 1.4 cents. 53.20 is where that settled at. That's the big mover today. Canadian dollar down 13 points at 72.65 from where we were yesterday. Live cattle down $2.35 a hundredweight to 232.60. Feeder cattle down $3.30 to 357.25. That reminds me, we're also going to be talking a little bit about the cattle charts today as well. All right, let's take a look at December soybean oil. We saw some pretty big losses today in the soybean oil market. A lot of that has to do with the EPA's biofuel proposals. Now, these aren't necessarily set in stone, at least at this point. The EPA is keeping options open, but the market definitely took this as a negative today. This was released yesterday, so we didn't see a lot of follow through on it yesterday. But today, or even in the overnights, we really saw losses in the soybean oil market as we progressed through the day. It closed close to its lows as well. So what's happening here is the U.S. EPA, or Environmental Protection Agency, yesterday issued a proposal for reallocating to the large refineries the biofuel blending obligations that were waived under the small refinery exemption. I think we've talked about this before, but it's offering two primary options, which is 50% of the reallocation, or 50% of the blending obligations get reallocated, or 100%. They're also seeking some feedback on whether there's a number in between there. Of course, the biofuel groups, including biodiesel, which would affect soybean oil and canola oil, want full reallocation to ensure that these small refinery waivers don't, take a bite out of the demand for products like corn and soybean oil, while, the refiners are, of course, opposing the reallocation, citing that there's increased costs. So there's a bit of a back and forth going on. And of course, the current administration in the US backs both farmers and agriculture, as well as oil and gas companies. So it's a bit of a dichotomy for the current Trump administration to figure out which of those industries to support the most. Probably the ones with the largest amount of or the biggest advocacy groups. So anyway, we did see canola peel off a little bit today. I personally think that canola oil's losses today were more of it was related more to the soybean oil story than what I'm going to talk about here, which is Statistics Canada. But we did see canola dip back down from some of the highs above 640 in the last couple of days, down now to 628. As we mentioned, that 20-day moving average, and here I'm going to kind of point this out here. This trade right here around the 20-day moving average, a little bit concerning. We'll see that as a theme in a lot of the charts here. It looks like it's trying to fail the 20-day moving average, which might mean that this little rally here might come to a close. We were looking for carry, follow through above the 20-day moving average, and of course, we always like to see full candle close or open and close above the 20-day moving average. But this is what we are dealt at this point. So, at this point, the market may look more neutral or range bound, or may even push again towards the bottom of the channel. We're not exactly sure yet. I know I get accused a lot of riding the fence on some of these things, but that's just my nature as far as identifying both opportunities and risks in this market. So here's what Statistics Canada released today. The September estimate now has nudged Canada's canola crop above the 20 million ton mark, which is actually more in line with the USDA's assessment from last week. Pretty much all of the increase here was tied to stronger expectations in Saskatchewan. National production is now forecast at just over 20 million tons for 2025, which is up about 90,000 or 91,000 from the last projections at the end of August. So they do two releases within very short period of time of each other. Of course, the upgrade reflects like higher national yield of 41.2 compared to the 41 last time. So just a 0.2% bushel per acre increase. All of the acreages remain steady at this point. And at the provincial level, the Saskatchewan crop is pretty much solely responsible for the upward revision. The Saskatchewan's canola crop is now pegged at just under 11.2 million tons, which is modestly higher than the August estimate. And yields are expected to reach 40.6 in Saskatchewan. By contrast, Alberta and Manitoba estimates were actually unchanged from August. Alberta's crop remains forecast at 5.75 million with yields at 41.5, while Manitoba is steady at 2.95 million tons with yields projected at 43 and a half. So that's kind of where that lies. Here's what the canola yield estimates look like now. There have been years with yields above where we're at now. This isn't a record yield. So that means that Statistics Canada has the ability to move that higher. We do think that not necessarily that this year is expected to move higher, but we still have a bias that previous years are understated as far as production, mostly because demand numbers are relatively easy to find, particularly from past years, and the carryout numbers that we are seeing are unrealistically low. And that's again based on data. That's not a finger in the wind kind of assessment on that either. So we know that Statistics Canada needs to adjust the S&D for previous years other than 2025. And I guess we'll have to wait. We'll have to kick that can down the road to the December, which is a result of the November survey. So the November survey about production and stocks and things like that is the first time that they actually do a survey. All these other production estimates at this point have been model based. Let's look at wheat. It was also up in this report to 30.1 million tons. There was some pretty big adjustments here, mostly to durum and spring wheat. Durum was about 600,000 tons and spring wheat about 500,000 tons. So the biggest, as far as a percentage of production, was definitely the durum crop, which is in and of itself its own market. So this is the excluding durum market, which includes winter wheat as well, which a lot of that is grown in Ontario. So if we kind of strip that out, here's the spring wheat production estimates for Canada, which is largely Western Canada. 26.6 million tons versus 26 and a half last year. So not a big difference. The yield is coming in a little bit higher, so reflecting the lower acres or the lower harvested acres. So yield about a full bushel an acre expected here above last year at 53.1. Again, our bias is probably here for a little bit higher as we move through December. And we're not sure, we're not necessarily as critical of Statistics Canada assessment on the wheat yields and the wheat production from past years, as it's a little bit more difficult to prove statistically that there's as low of stocks compared to history as canola. But we do expect some upward revisions nonetheless. Wheat did take a bit of a spill today. Didn't really change the trajectory in any way. Here's December hard red winter. It took fully within the candle of yesterday, which was a really positive candle. We did see some losses today, which stayed inside the trading range of yesterday. So it's not to say that this is trend changing or anything like that, but just to peel off a little bit on the spring wheat side, on the winter wheat side. Here's the December spring wheat as well, which is a very similar story. We're still staying underneath that 20-day moving average, though, in spring wheat. Again, that 20-day moving average in a lot of commodities is becoming important. That's particularly true as well for the cattle market. As you see here, we saw last week the cattle markets dip below the 20-day moving average and break their trend line. They've been having some choppy trade in the last little while, couple up days, couple down days. It's been more or less neutral since that the big shock below those those support levels. That this is October live cattle. It's still the most liquid and the one with the highest open interest at this point. That will start to shift into the next month, but um, that's where we're at right now. Here's the feeder cattle, very similar pattern. Again, you can see that it this market last week broke through that 20-day moving average and has been kind of steady ever since. But it kind of restructures the chart a little bit with a little bit more of a downward bias in both of these. So as we kind of have been talking about, or as we saw that happen last week, it is a good idea to look at hedging strategies for feeder cattle if that's one of the things that you are waiting on. All right, let's talk a little bit about interest rates. So the Bank of Canada reduced its interest rate today to a 3-year low of 2.5%. That was a quarter of a point below the previous one. This is the first cut in since 6 months, and the bank did say that they would be ready to cut again if the risks to the economy increased in the coming months. Um, this cut reflected weaker jobs market and less concern about underlying pressures on inflation. So I think that there's probably going to be more focus put on uh, the the jobs market and just how the economy is performing overall now that inflation is kind of under control. Those are the two mandates of most central banks, and that is same with our own. So if we start to see the job market start to fade a little bit more, that would probably result in more cuts as well. The Fed, of course, the U.S. Federal Reserve delivered a same size cut today, a quarter point, uh, indicating that. And it also indicated that it will steadily lower those interest rates for the rest of this year. So, policymakers responded to concerns about the weakness in the job market in a move that won support from most of President Donald Trump's central bank appointees. The only new governor who was a Trump plant that dissented from this rate cut in favor of a larger rate cut in favor of a half a point rate cut was Stephen Miran, who was the most newly appointed governor to the Fed. And again, he was more in favor of a half point cut. But I think the gradual cut nature here will satisfy most in the long term, or into the end of the calendar year. So, what did that do to the U.S. dollar? Well, we actually saw the U.S. dollar poke down to new lows today, and it actually did break below the previous low here from, oops, uh, previous low here from June. I'll point that out here. But it did rally back after the this is the US dollar index, by the way, after the report was released. So relatively it finished off in a neutral position to where we were yesterday, but still showcased that the market was right in pushing the US dollar lower, as there are more cuts to come according to the bank. Here's what the Canadian dollar did, very similar in its trading pattern. It did make a little bit of a new high here on the basis of the US dollar weakness, but did close kind of inside that same range as we saw yesterday. So nothing trend changing here, nothing much of a surprise actually in most of the in most of the interest rate announcements today. All right, if you haven't subscribed to this channel, please do so by clicking the subscribe button. We'll get agriculture market information that is specifically related to Canada, particularly Western Canada, delivered to you. Also, feel free to subscribe to our premium content, which gives you morning reports, ad hoc reports like today's Statistics Canada, etc., as well as our weekly reports that we publish at the end of the week. All right, that is all we have for you.